Hey guys, welcome back. Drip Coach here, where we don't trust, we verify, and operate with integrity and transparency. In today's video, nope, that was last time. We are going to be discussing a clip from Anthony Pompliano and Jordi Visser. So he always has some really hot, clean, spicy takes on what's actually going on behind the scenes. And in this one, it is no different. He is framing this that we're about to talk about here, the information behind the Big Short, the movie The Big Short, and I forgot the one about Silicon Valley and Facebook or social network. And Jordy's about to say that, yeah, he was around for that Big Short era and give some additional context on why this is relevant and what it means for right. If you haven't seen Big Short, it's basically a movie with Christian Bale, where he is playing the role of a investor, and it's based off the book by Michael Lewis, and it follows the stories of big investors that basically bet against the mortgage-backed securities and kind of the 2008 housing bubble collapse. So basically, people betting against that made a bunch of money because they were shorting the market, like they were expecting this to happen, and it did. And again, the framing that Pomp is using in this is that a lot of people think that this is the next bubble, AI or Bitcoin, and they're trying to short it and be the next, big win for them.
The two of us. So when you mentioned The Big Short, you were young when that whole event occurred.
I was also a young pup.
Yeah, you were. I mean, that was 18 years ago when the whole thing started. I was managing $1 billion fund, and I was heavily involved
big dog
in
in the
scenario.
House. Big dog in the house.
And I do remember vividly all of the Michael Burry thing. Now, when we came out of that, I was kind of one of those people before, meaning if you would have met me, I started my career trading Mexico in 94. They had a devaluation 2 months after I took over the book from Morgan Stanley. Then I moved to Brazil in 97. They had a devaluation in 99. I traded a bear market there. Then I came back to the US. I took over the S&P options book from Morgan Stanley.
Bam.
At the end of 99, and we had the crash there. I was kind of a doom and gloomer. And when I got...
Hey, get out of Bitcoin, man.
No, see, this is the good part. This is what changed, and Bitcoin was right around the same time. I believed, and I had moved a very, very high majority of my money into gold, and had been one of those people that took my money and said, all right, what am I guaranteed in the banks? What's the FDIC? So 250,000 in all your banks. Like everything was dispersed into many, many banks so that I could be sure. I thought the banking system was going under. So beginning in the time when the bottom was made, and before the bottom was made, S&P bottom famously was at 666 in March. But in October, I started becoming a perma optimist. And when I say perma, I was scared during the EU-Greece situation. Mm-hmm. But when that ended in August of 12, I went to Singularity University in June of 13. And that was to answer my question of how Amazon wasn't a bubble. How is this stock not a bubble? So everyone that calls AI a bubble, I already went through the journey that you should go through, but they have no need to, because most of the people that say this in social media, they're either just dark individuals or they've made a lot of money and they actually want to be right about this one thing because they believe the system is a Ponzi scheme. I will say on our show, watched by many, many people, the fiat system is a Ponzi scheme. It is.
Of course.
But the government was $7 trillion of debt in 2007 when Michael Burry challenged the system, when George Soros challenged the system, or Druckenmiller challenged the system. They were big relative to the system. Now the government is $37 trillion. It's 120% of GDP. They can't allow it to go under, and they have tools that were created. We still have QT. We weren't supposed to
pause there real quick. So that is a huge take that you need to think about. Jordy, again, he gives his acumen, the Rolodex of things that he was around and the money he was investing in. So he lived through this. He knows what a bubble looks like. He knows he benefited from shorting these kinds of things and rolled into different opportunities from that. So again, he said he started doing the homework on why Amazon was not a bubble, and it's proven to not be a bubble. And that same framework is what he's applying here to Bitcoin in the new developed tech space where tech and AI and money have intersected. So listening to people like this with their history, their background, their acumen is very, very important for you to create your own mental framework. It's not to just say what they say as gospel, but it's like, wait a minute, this guy's got some, some street cred. Maybe I should at least add this into my train of thought to, be part of my decision-making framework. So, let's go to the next clip. I forgot what I was about to say right there.
Supposed to have QE for more than a year after we did it. Bernanke told us it wouldn't be here. So for everyone kind of going through this, unfortunately for all of you, it is not only a Ponzi scheme, but the end game is not at crashing. The end game.
Oh yeah, that part. So, like you said, there are tools in place. They and this is a Jack Mallers thing, and also Raoul Pal. They cannot let the system collapse. It has to stay afloat because it will literally destroy. It's like unplugging everyone from the internet. Like we just had that brief Amazon web server collapse that only controlled about 30% of the internet. And like that made some financial industries and stuff like shit the bed. So the dollar and a complete collapse in the American economy, it is tied to so many more things. So the only option is to print the money. So like, I think Jack gave this analogy as well. It's like, let's say you owe your friend $100. We only have two options, us normal folk. If you owe your friend $100, you can say, hey man, I owe you $100. I'm gonna pay you $100. Here you go. We're still good. The other option we have, hey man, I know you're gonna hate me for this. I don't have your money. It might end our friendship, but I'm not paying that back. I'm a default. I can't pay you back. The government has an option unique to only them, especially the Fed, because we are the global world reserve currency. Our job is to print dollars and export them, but we can also do that for ourselves because our debt is denominated in that thing that we can make infinitely. So the third option that they have, because if they can't pay it back, we know that they don't have 38 trillion or they would have paid it back already, right? So that's common sense. They can't default because if they default, it will actually collapse the entire US economy. It's not like Venezuela or Argentina or something like that, where they can go to another currency while they fix and reboot the existing system. The US does not have that option. Hence the need for stable coins. Hence the need for backing the dollar right now in sound money assets like gold, Bitcoin, silver. So the third option is to debase the currency, to print what you owe, to make what you owe worth less than what you currently have on the books. Same way they say, oh, $1, 40 years ago bought so much more. Well, it's still $1, but what it buys has been debased. You get so much less for your dollar, if anything, now. So on the books, you will still have $38, $48 trillion, but the ability to pay that back when you have assets that are appreciating like Bitcoin at 50% CAGR, compound annual growth rate, and doubling every 18 months, it's like, oh yeah, if we just go long enough, then this thing will be able to make up that difference. Hope that makes sense.
Is it being replaced by the new system? The new system is stablecoins. The new system is Bitcoin. The new system is tokenization. All of this is coming, and next year is going to be a boom year for all of those things.
You know, the mental framework that I have is when you have a balloon, you can pop the balloon. And I think that's what everyone thinks is the end of the fiat system. Like you pop it, bam. You can also deflate. You just slowly let the air out. And that to me feels like not actual like deflation in the sense of thing, but like you're just slowly allowing the old system to kind of move into the past, and that new system is showing up. And so I think that it is the like anticlimactic aspect of I want the pop. It's not really that almost never in history. Yes, there are certain things where there has been, massive devaluations, or there's been, like very severe financial crashes. But in terms of these regime changes, even, Ray Dalio and anybody go read, they are very kind of sequential in nature. And so it then brings us to this question of, okay, if you're a retail investor today, I think more than ever, you have more information, you have more access to the market, you can trade 24/7. You have things like prediction markets, you have stocks, you have access not only to the US stock market, you got access internationally as well. There seems to be this belief that retail investors can take their capital, put it in the market, and they're going to benefit from this stuff. There's an article in the Wall Street Journal recently that said the bottom 50% of Americans have more exposure to the stock market than ever before. Since 2020, the equity values of that, the collective equity value has gone up almost 500% since 2020. So they're putting more money into the market, which is a good thing. But then there's this now infamous article in The Economist from the former chief economist of the IMF. I'm sure she's a nice lady, who basically made the argument that when the stock market crashes, it is going to be bad for the world because too many people have stocks. So I don't know how we can say, hey, not enough people own stocks, the rich people own all the assets, like this is bad, we need to do financial education, get more people. But then the economists are literally saying that no, people own too much stocks. what should retail people do? And like, do you think that there is concerns about how retail investors are allocating to the stock market?
Retail should keep doing what they're doing. It's been my absolute pleasure to deal with that world more and more every day. And I mean that sincerely. I mean, I hope the content that I do helps people, because I'm trying not to be sensationalized and all this. And I'm trying to give people help in terms of what the long-term view is. But there's two important events that have allowed retail to challenge the old institutional framework of Wall Street, and in particular asset managers. Actually, I'll say three. Number one is the democratization of information. So when you say social media, when you say not only X, but
we're gonna cap it there after he gives his three frameworks. Because yeah, this basically what he's saying is that we have the opportunity right now in front of us as retail, and with Bitcoin being the first asset, I guess you could say, without an issuer, and being released to retail first. There were no gatekeepers for it. And it's still, there's gatekeepers now to some degree, but you still definitely have access. And that is part of that democratization.
Reddit, Discords, anything that they're involved in. I love putting on X, and there's I can just jump on any spaces and listen to something, even if it's for 10 minutes while I'm kind of walking around or cooking or whatever, and just democratization of intelligence. They have the ability now of using AI. And here's the advantage. People my age don't use it. They're scared of it. I'm giving presentation after presentation and doing consulting work. It is really painful to watch people not use it, partly because, in fairness to them, they're working at these jobs and they don't have the time.
We have the democratization of information and the democratization of AI, which I would kind of put those in the same category. AI. I get it. And he actually didn't get to the third one because they got on a tangent about Elon and what he's able to do, why people hate him so much, the amount of companies he built and hit these home runs. This means it's something, again, you should not ignore and look into regardless of what your feelings are towards him. So the TLDR for this is that big money, people who have been around, seen actual bubbles, is telling you that as retail, you're doing the right thing, you're in the right space at the right time. Just stay humble and continue to tax ads. Like that's the disclaimer. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily in it.